Let's get to what is the big talk of the town. And that is how we are going to show you where you're going to start saving some money. Those of you that own a home right now, you're going to start seeing some relief come 2024. Should have already been in place, but we're going to talk about that too. That is the tax relief that came out. We all voted on as a state. The big state of Texas voted in November and it got approved, right? It was an $18 million tax cut that was coming from the surplus of tax revenue that the state had from the previous years. 12 billion was to reduce the school property tax rate by 10.7 cents. So every school district's going to have a different tax rate. But nonetheless, we're seeing some relief in that area. Here's coming some of the other big ones. They increased, if you have a homestead exemption is those of you that if it is your primary residence that you live in, you should have a homestead exemption. We're going to talk about that a little bit too. And if you do, that homestead exemption reduced your tax liability originally by $40,000. So if you had a $200,000 home, you were being taxed by the school property tax at 160, not 200. That has increased to 100,000. So if you own that $200,000 home, you're only being taxed the school property tax by 100,000, not the 200. That's going to be significant. What does that mean to you? For an average person, here as we look at, average prices and then kind of the average of school property tax rate, those are going to vary some, but that means a whopping $1,250 to $1,450 a year. Guys, that's about $100 or so on your mortgage payment every month that you're going to save. We're going to talk about what to do with that, some ideas that I have. One idea that I told my husband was, hey, baby, I just saved this. We got $100 that I get to spend on the nail salon or getting a massage or something else that I get to go shopping with. I don't know. Maybe that's you. But I've got some other ideas of what you could do with that money. That is significant, guys. Does that not just like, if I had like the button that just like the hoorays, we would all be doing that, right? It's incredible. Now, there are some pros and cons to that. I'm not going to get into that in this discussion. It will significantly impact those schools that are more rural, where the average sales price of a home is like 150,000. Now they have less money to, unfortunately, to run their school. So there's going to be a lot of stuff that goes on with that. Let's talk about some other things with this. 3 years, for the next 3 years, there's a 20% cap on the appraisal increases every year for properties valued at 5 million or below. What does that mean? Okay, you own an investment property. I own an investment property. And it's not my homestead. So your homestead, there is a cap at 10% every year. They can only go up on the appraised value by 10%. If it's not your homestead, there hasn't been a cap. So for those of us that have had an investment property over the last couple of years, we have seen those taxes like double, go insane, because they could just raise it to whatever they thought that the value was. It was insane. Now what they're saying is, hey, we're going to cap that at 20% every year for the next 3 years. So there's some relief there for those of you that have investment properties, for those of you that own a business property, or, whatever that is. We're going to see a cap and some relief in that area. The fourth thing is cuts franchise tax for small businesses. Hooray for those of us that have a franchised small business. So this is really, really great news. Like I said, all the savings that we're going to be able to see right there. Now, what can we get some more savings out there? Well, let's talk a little bit about, when does that go into effect? It should have gone into effect like immediately, but of course, anytime somebody does something good, something negative has to come up out there. Somebody always likes to file a lawsuit, right? And because we're this great state of Texas, we want to give everybody an equal opportunity to show their case. So, of course, we're going to have this lawsuit happen. And nonetheless, everything's on hold until we resolve the lawsuit. What is the lawsuit about? Well, some right-wing activists claim that the 2023 election was invalid because the state's voting equipment is not certified and the voting machines were not connected to the internet. Legislation has already looked at this and said, what do you think they're going to do? it's expected to be dismissed. Unfortunately, we can't just dismiss it right away, but the trial has been expedited. The trial is to happen no later than 50 days after the election. So we should see that coming about January, February, would be my expectation that we'll be able to kind of put some resolution on this and be able to benefit from that tax relief that we all voted for, right? Now, what should you be doing? What should you be doing to get yourself prepared for this? Because we want everybody to experience that tax relief, because for years and years and years, we've been seeing them go up. Number one, make sure that you have your exemptions in place. Do you have your homestead? Again, that's your primary residence. Are you a veteran? Are you disabled? Are you a senior? Are you a survivor of a veteran? Or, there's a lot of different exemptions out there. Make sure that you have all the exemptions that you can have on your house. The one great thing is, especially for like our seniors who are capped at their taxes, this tax relief for some of our seniors, we're seeing them pay zero taxes, school tax on their property. So some great benefits out there. Make sure that you have your exemptions. Number two, verify with your local appraisal district or tax assessor office on the relief that's applied to your account. So you're not going to see it right now. At least I don't think so. I haven't seen it on mine. But when this does, after we have this trial and after we implement it, then make sure that it is applied to your account. The third thing I want you to do, listen very carefully. If you escrow your taxes into your mortgage payment, make sure you're contacting your lender to see if there's a surplus. Now, if this happens January, February, you're not really going to see too much of a surplus, okay? Because the taxes are due by January 31st, and most lenders will go ahead and pay that tax bill in December. It might have already been paid as we're talking right now. So you may not see a big surplus, but if you do, make sure that you get that money either refunded back to you. You can roll it over into payments into your next year. Have them recalculate the payment. So if you're paying $2,500 and your taxes are now $100 or $1,200 less a year, you should see that mortgage payment come down by $100. So it should be $2,400. So make sure that they recalculate that. Here's my biggest piece of advice, thing I think we all should be doing, because we've all been kind of used to paying that payment. And if you're not being impacted by it and you're still able to make that payment, keep making that payment and take that extra money and apply it to the principal. Whew. Talk about some savings, right? Do you know how much if you're paying an extra $1,200 on your mortgage every year, how much that's going to impact, how much less interest you're going to be paying over the grand scheme, how much shorter it's going to make how much more equity you're going to build quicker in your property? That's what I'm going to be doing. So if you're able to do it, follow suit, follow with me, just put it to your mortgage payment. All right. Yeah, I know. I'd much rather go shopping or go get a massage or something like that and spend the money. But let's just face it, I'd rather have more equity in my house. It's probably the wiser thing to do. Now, I'm going to go back to